Hello, everyone, and welcome back to the HUBB Live Trading Room. It's great to be back with you all during trading hours. I'll be introducing Mr. Rob Roy here in just a few moments, but first and foremost, we do need to cover our disclosure disclaimer agreement. If you've attended any of our live webinars or events, and you've likely seen this by now, the main thing to take away from it is that we are not licensed investment advisors in the United States. Nothing is to be taken as personal investment advice. That's available on our website to be read in detail at your leisure at all times. Market continues to digest the Fed's, what would some say, mild surprise of 50 basis points. And we had some positive economic data from that this morning. And I'm wondering how that plays into the big picture of everything. So very interested to hear Rob's thoughts on that and very excited to interact with you all. So at this moment in time, the man of the hour, Mr. Rob Roy.
Hey, Zach, long time no see. Welcome, everyone, to the HUBB Live Trading Room. We're going to focus, as mentioned earlier, if you were on the EWO live show, we're going to talk about AI. That's what we do here at the HUBB Live Trading Room. And so I'll switch over to the AI charts in just a moment. But before we do that, I thought I would give just a couple little tips here on the software. I had a couple questions about this. Utilizing the tools, the ZigZag tool. You can see here that we clearly have an ascending triangle in the S&P, but we also have a zigzag that's formed here. That's an interesting dichotomy when it comes to Elliot wave. But when you draw it, let me go back and start over here, just so that everybody is aware. It's just a matter of playing around with the tools and figuring out how to use them. But when you're drawing a zigzag, you want to start at the beginning of an impulse move, figure out where it ends. So that's clearly the end of the A wave. And then where was the B wave correction? And you can see that the tool highlights that in a green bar, a green shaded area there for you. It's telling you that's the area that you should be clicking. So there's the low bar. So you click again there. And now it looks for the C wave extension. Once again, it gives you a green area for your target range. And so this is for timing, etc. That's the 100% extension. If you try to click out here, it won't work. You have to click in the green shaded area. I like to keep these kind of linear. And so I click along the same type of a symmetrical pattern, if you will, to the zigzag, which it really seems to work out that way the majority of the time. So that's how to use the zigzag tool in a nutshell. I also wanted to show you the fib retracement tool. And so when you click on that, you click at the bottom again of the move and see how it starts to draw it with different shading. And you can go through and change those settings if you want. I use the primary fib ones. Then you go up to where the top of that impulse move was and click, and now you're done. And it shows you these are the levels, and it's different shaded areas, which makes it really easy to see where the breaks are between the Fibonacci levels. So 38.2% fib retracement is clearly what we got out of this first impulse move, which we just showed on the zigzag tool as well. So I really like that the new software does this shading to help you distinguish where these points are, rather than just having a whole bunch of lines on your charts and looking over to the right. Just a kind of a nice little touch feature to add in there. All right, so let's take a look at where we are with the AI today. As I mentioned in the Evo Trader Live, I think the AI might be telling us something. We talked about how, okay, it looks like we're trying to break out and test the breakout of this ascending triangle in the S&P, but it's a little too early to give that a full-on green light that's what we're doing. We'll know within the next couple of trading days, maybe by the time we get to the insiders meeting Thursday night. But if I come over here and look at the AI, when we go and look at the bullish signals, you can see that there's only two, symbol R and symbol VKTX, neither with a score above 70. So nothing that we would want to be interested in. So you would think that with this kind of move up we've had in higher lows, and the fact that we're breaking above this ascending triangle, that we might see a few more signals that are saying, hey, this all looks good, and take a look at these stocks. We've had a few, as you know, we took a bunch of them off before the big Fed announcement. So we only have a couple positions now. But when we look at R for Rider at 69%. We've never sent out an alert on anything under 70%. We like to target 75. But when we look here, we can just see that it looks pretty good, a little bit above the 10-day moving average. If we look at the CCI, kind of meandering a bit above positive 100, that's good. You look at the ADX though, and you're like, it's trying, but it's not quite there yet. If we get another day with that negative directional indicator going down and the ADX moving up, we might get up to this 20 level, but we're not there yet. So when you come over here and click where it says cursor, and then you put the crosshairs on, that's what helps you tell what the price is over on the right-hand side. So if I go over and draw where the cursor, the crosshair, hits that ADX, you can see it's still under 20. 1966 is the price over on the right. So we would need that ADX to be above 20 and above the negative directional indicator. There is good separation between the two directional indicators, but we still want to see that break. But with the score of below 70, we probably wouldn't do anything anyway. This one has a couple of zigzags in it, so you can see this move here with the zigzag right down to 75. That gives us 100% extension, pretty much where we are now, which is something to pay attention to. So boom, right there. And now let's see what this next zigzag looks like, and that would be a complex C, maybe. So there's the A, and gosh, once again, in this stock, both of them very close to not being qualified zigzags with the B wave, but it is there. And then this one gives us 100% extension, also very close to where we are now. Now, the AI target is up here at 156, but I really like, as you know, this is how, if you go back and look at the data, the AI impulse strategy has actually outperformed the pure AI. And I believe this is the reason why, because the pure AI does its analysis and its reconciliations on actually hitting the targets. And so if we have a zigzag target in the wave 3 and we hit that 100% extension even before it hits the AI target, we'll take it off. And I think that's where you add in the fact that the combination of both, the combination of having these Elliott wave zigzag patterns with the AI is what makes it so powerful. Each one on its own has its own merits, and the data shows they're both very successful systems. But if you can take the best of both and marry them together, and that's what we're doing as we move forward with the AI impulse search with these zigzags within the wave 3. So I just wanted to go ahead and share that with you. So there's nothing that we would do there, but there's something interesting on the sideways drop that I was looking at this morning. So if you come up here where it says Elliott wave and then come down here and move to sideways with a drop, then we can see that we have CRBP, which has a 90 score. And so if we click on that, we have a couple things to consider. First of all, some of you have joked about it. The worst time strategy alert we ever had was on a drug company stock. And so we kind of came up with the mantra, don't do drugs. Well, you see, this is Corbus Pharmaceutical, obviously, either a drug company or in the biotech space, probably a drug company. But with a score like 91, and then you look back and say it does tend to want to stay in a trading range, it's awfully enticing. You're like, well, gosh, if we were ever going to do another drug company stock, this one might be the one. A 91 score, I think that's the highest score I've seen across the AI mantra. And the history suggests that after this drop, perhaps it would stay there. So it's very, very interesting. But this is where you come to the other side of the coin, and that's where we start looking at options. And so the problem here, we look at the put side, and you can see the spreads are kind of wide on looking at this. So if we were to go down to where we are with the stock price now, which is down around 20. We need to add more strikes in there to get there. Still not there. So let's just go hit all. And to scroll down, it actually isn't even going all the way down to 20. They're still working on the option side of it. But I can tell you that the spreads are a mile wide when you get down to where we are in the strike. And the other side of it is there's no open interest. All the open interest was up here where the stock was trading at 50 before the big drop. You can see that's where it was at 50. Well, there was 1,000 contracts of open interest on the 50 strike. But when we come down to the 20 strike, there's none. So it would just be us against the market makers. And it's a 60-cent wide spread on a $2 strike. And so you're not going to do that. 10% is what we want to look for on the width of the strikes. So if it's a $2 by 250 spread, 25 cents is as wide as you want the spread to be. So if we're $2 by 280 or 260, we got a 60 to 80 cent spread. We want that to be more like 20 cents. And so the spread's wide and there's no open interest, which means the market makers aren't going to split that spread with you. That's what the zero open interest means, is you're trading with the market maker. They're going to make you pay that ask. Maybe you could get 270, maybe. So unfortunately, there's nothing that we can do there from the options analysis side. And as they continue to tweak that and get that sent out in the not too distant future, you'll be able to go right to that and create your strategy. But I wanted to show you this one because at first blush, it just looks like, wow, that's just an ideal one to put on. But we can't. And then if we go back over and we look for the directional stuff, on the bearish side, there's nothing. So let's think about that with where we are with the market. And we've got two signals on the bullish side, neither one of them above a 70% score. If we are breaking above this resistance area and a legitimate breakout of this ascending triangle, wouldn't we have some stocks with higher scores? I mentioned in the Ewo Trader Live Show that probably volatility strategy is where things are going to be for the next couple of weeks. That goes along with the year 4 election cycle, September, October. All those kind of things kind of play into getting ready for breakouts after the election. So if this is a legit upside breakout from this triangle, I would have thought we would have had more higher scores on the AI bullish side, and we don't. So I think the AI is telling us just what the market is. Doji, maybe a doji today, maybe not. We've traded a little bit lower since the Ewo Trader show at 11 o'clock. That was a doji at that point in time when we signed off. So perhaps the AI is saying, yeah, the market isn't really sure right now. It's not giving us the data that we want to send out scores above 75. So this is one of those times where you just pause a bit and wait and see. But we don't have to do nothing, because if we look at this ascending triangle, and it's big, it's been forming since the highs in mid-July. Then we went down to the lows in early August. Since then, we've basically been in this area. That's a long time for the AI to, or for the ADX to go down and say, hey, we're just going to consolidate for a bit. We got right down to 15. We've started back up. It does look like the DMI is trying to form to confirm an upside breakout. So you can see the ADX, if we can get here at the close, maybe breaks above 20 today. We got the positive directional indicator going up. We got the negative going down, even as we're really having kind of a quiet day on the tape. Maybe that does give us the signal that, hey, we're clear to go and we are going to take off and run to the upside. But in the meantime, I think if we can find a good strangle to put on over the next couple of days, those are going to be the highest probability trades, at least for right now. we may have a whole different story by Thursday night. By Thursday night, maybe we have consolidated this move and started higher, and the ADX is broken above 20. The two directional indicators have continued, and we have a completely different picture. And that's the beauty of trading technical analysis. All you can do is go by what data you have at that moment in time, and then you can go from there and see what may be available. All right, Zach. So with that, it's really, there's not a whole lot to talk about on the AI side of things this Monday. I covered that, covered a couple little tips. I know you see this triangle tool. I wanted to talk about that because a couple people have mentioned that, which means you guys are playing around with the software. Love that. And there is a triangle tool here. It's just my personal preference. You know, triangles is how I made my name in the world of options. The very first book I ever wrote was on this, the strategy using the gamma delta breakouts from the option strikes and looking for the low ADX to give us an idea of when we were going to break out, et cetera, all that. I just prefer to draw the lines by myself. So it's not that I have anything against that tool. It's a personal preference of mine. Because some of you said, hey, I see you don't use the triangle tool. If you want to use it, hey, more power to you. I just prefer to draw these lines myself and look at them from a visual standpoint. You may have heard me talk before about visual spatial recognition is one of the things the IQ test tells me that I'm best at. So, you know, I don't know how smart I am. I got a pretty high IQ score, but it was mostly because of that. So I like looking at patterns. And so there's times when I love using the tools that are available with the software. There's other times when I like to take advantage of just drawing the lines myself and connect the dots where you're connecting the highs and the lows. So anyway, a little bit extra commentary. Zach, I see you're messaging me that there's no comments at the moment. So brief session today, but not whole much else to talk about from an AI standpoint. Hope everybody is finding out that when they put an indicator on their screen, they just go up to where the plots are and hit the little spindle here, and that takes you to creating your setups, playing around with them. That's the most important thing as you're utilizing and learning these tools, and to set them up the way you would like them throughout the software. So let's see what happens in the market between. We'll look at Trade Finder tomorrow. I don't know if we'll get enough information by tomorrow, but perhaps by Thursday night during Insiders, we'll have a little more information and maybe a couple higher AI scores to look at. So that's it from the AI side of things on this Monday. So I'll let you get back to your trading, and we'll see everybody during Trade Finder tomorrow. Thanks a lot for watching. Look forward to talking again soon. Take care, everybody.